16 years ago, Florida was at the epicenter of significant housing market problems, and today similar issues are resurfacing once again. According to Zillow, the typical value of a single-family home in Florida was $252,000 in 2019, and fast forward to today, that figure has surged to $415,000, marking a staggering 65% increase in just 5 years. This rapid escalation is unprecedented in the long-term view of the housing market, highlighting the extraordinary and alarming growth in home values within such a short span. The reality is so much worse. Florida's wage levels are not particularly high. The state ranks 37th in median annual income. This places it relatively close to Alabama in terms of earnings. The typical worker here can expect to earn about $38,000 a year, which means that, post-tax, you are left with just $33,000 to afford a home here. So as you can see, that leaves you practically no options. With the median home now costing $415,000, this means that on a 30-year mortgage with 20% down payment, your monthly payment would be around $3,300 a month. Remember, Florida is not only facing an affordability crisis from a price and interest rate perspective, but it's also seeing a massive jump in insurance costs due to the simple fact that it lies in the hurricane belt and is prone to a massive amount of insurance fraud. It's not unusual to pay $4,000 to $6,000 for a typical policy, which is now only making matters worse for new buyers and existing homeowners. Analyzing the financials, it becomes evident that a typical worker in Florida faces significant challenges in affording a standard home in the state. With the median house now valued at approximately $415,000, an average annual mortgage payment amounts to around $36,000. This figure surpasses the state's median annual income by about $4,000, illustrating a stark affordability gap. Even if we consider a dual-income household where both partners are earning, the financial strain remains severe. Under this scenario, over 53% of the household's combined take-home pay will be dedicated to covering the mortgage each month. Such a high percentage of income directed towards housing costs is unsustainable for most families, reflecting the harsh economic realities of the current housing market in the Southeast. This situation underscores the growing disconnect between wage levels and housing prices, making it increasingly difficult for many residents to maintain a reasonable standard of living. Only 5 years ago, the situation was wildly different. A typical home here would cost around $250,000, and the interest rate was so low that a typical payment was around $1,300 a month. Today, this reality is gone, and the whole state has been turned into a real estate casino. The prevailing theory is that the state's market is in the worst housing bubble we have ever seen, worse than what was happening in the years prior to 08. Many of you are familiar with Nick Gelly and his Rural Consulting channel. Gelly's analysis draws on data comparing income levels in specific areas to their corresponding real estate prices. A striking example from his findings is Tampa, Florida, where the so-called price-to-earnings ratio for housing is nearly 76% higher than historical norms. For these ratios to stabilize, there will need to be either a significant increase in wages or a dramatic reduction in home prices. The prevailing theory is that the state's market is in the worst housing bubble we have ever seen, worse than what was happening in the years prior to 2008. Gelly's chart suggests that many experts believe the next market crash could start here, with predictions that home prices may need to decrease by at least 35% to align with traditional PE ratios. This perspective raises a critical question. How can housing prices remain so high when they are increasingly unaffordable for the local population? The substantial disconnect between local wages and home prices suggests that a correction is inevitable to realign these figures with long-standing averages. If you watch other YouTubers, you will see that this is probably the most common theme among all videos. The simple logic is that prices are way too high, therefore they must crash just as they did in 2008. For example, I'm sure many of you have watched Michael Bordo's channel. In an upload from about 4 months ago, he essentially made a video detailing all the various reasons why Florida has become a bad deal for many people. He even reached out to his community to see what kind of feedback he would get from people who moved to the state in the last 2 decades, and the answers were overwhelmingly centered around one theme: the cost of living. You can take a listen to him quickly explain right here.
For the past several years, Florida has become a massive hotspot for people to move to from all over the country and from all over the world. And during the pandemic, that actually just got amplified, and more people seem to just pour in here. And so today I want to talk about why moving to Florida pretty much sucks now, and why you should not do it. So the first thing, and probably is going to be the biggest barrier for most people, is Housing prices, okay? Real estate is way too expensive here for most people. The current median home price in Florida is about $380,000, and that is statewide across all types of property. So it doesn't really fit the bill for everywhere, guys, and that's kind of on the low side when you really look at how much it costs to live in a nice neighborhood in a lot of different areas across the state. And kind of related to this housing cost situation, you know, I did a road trip across the country this past summer, and I stopped in many different states, and the reality is, for what you get here for the money, it's no longer really worth it when it comes to purchasing a home in many cases. Like, you can move to other states where you can get a similar style home for half the price and also pay much lower property taxes and all the expenses that go along with owning and maintaining that home for a fraction. Now, you might not be close to the beach, within a 10-15 minute drive to the beach, and obviously you're not in Florida anymore, but that might be worth it for people who really want to become a homeowner.
As I mentioned earlier, there is widespread agreement among locals and experts that because costs have surged, they must decrease to align with long-term historical averages. This view is perfectly captured by a resident of Brevard County on Florida's picturesque East Coast. He states that housing prices have soared by over 120% in just 2 years. Although this figure slightly exaggerates the data from Redfin, it's fairly close to the truth when considering monthly payment trends. He also notes that homeowners insurance has risen by 40%, aligning with general reports, and that utility costs have significantly increased. All these claims are likely accurate given the recent developments in the state. When you consider he bought his home at a 60% discount from its 2007 price following the 2008 crash, you can definitely understand why someone like him is frustrated seeing such extremes in Florida. He concludes by predicting a 60 to 70% drop in prices, a sentiment that resonates emotionally and would make sense if you take into account the deal he got when he moved and when he bought his home. He states that housing prices have soared by over 120% in just 2 years. But the other side of the story is almost never discussed. Most YouTubers and residents agree with this consensus. The simple reasoning is that numbers have to fall because they are far above what was normal in the past. But there is a major flaw in this logic. You see, while it's possible that we will see a crash sometime in the near future, there is also reason to believe that this right here is essentially the new normal. Why? Well, because Florida has become a premier destination for folks all across the United States. With its incredible weather and booming economy, there are a lot of people moving here from out of state, and they're the type of people bringing the big money. In Broward County, for instance, it's estimated that 43% of all single-family homes are purchased by cash buyers. Additionally, nearly 78% of condo sales are also made to those paying in cash. This means that the majority of people buying here today in 2024 are those who have the means. And if you look at other premier spots throughout the United States, you can see that just because something was once cheap doesn't mean it stays that way or will return to that way. If you're skeptical about how real estate prices can defy economic trends, consider urban Honolulu. Even during the 2009 recession, its housing market was much tighter than what Florida faces today. For context, in 1985, you could buy a typical single-family home in Oahu for about $158,000. Adjusted for inflation, that would be around $470,000 today, indicating that even back then, homes were pricier than average. This historical example illustrates that some real estate markets have consistently been above the norm, hinting at similar future trends for places like Florida. Let's fast forward to today, where the median house in Oahu now costs $1.5 million. This shows that Hawaii's housing prices have doubled compared to general inflation over the years. It has shifted from being expensive to even more expensive, suggesting that Florida could follow a similar trend. Just because prices are high now doesn't mean they will revert to what was once considered normal. I'm sure Hawaii was viewed similarly, but over time its housing prices have continued to rise, redefining what normal is. So this is it for today's video. See you again next week with another video.